You know that feeling when the money just lands in your bank account? It feels like magic, right? You work, you get paid. Simple. But what if I told you that simple transaction is actually the final act of a super complex, high-stakes drama? Today, we're going to pull back the curtain and show you the secret life of a paycheck. Yeah, we've all seen one of these. A check and a pay stub. This one's from Murphy Hagera. It's got all the details, right? Her hours, gross pay, deductions, and that final sweet net pay number. But here's the thing. This piece of paper, it isn't the story. It's just the last page. The real story starts way before this check is ever even printed. So what really happens to get that money from the company's bank account into Murphy's? I'll tell you, it is way more than just signing a check. It's this carefully choreographed dance of accounting, tax collection, and a ton of reporting. Let's follow the money. Okay, our first stop is the company's money trail. Because see, before a single dollar can be paid out, the company has to know exactly where every single dollar is. It's like an internal game of tracking the cash with absolute pinpoint precision. And the main tool they use for this, it's called a general journal entry. The best way to think about it is like the company's official diary for its money. Seriously, every single time cash moves, in or out, an entry gets made logging where it came from and where it's going. It's the bedrock of accounting, and it makes sure the books are always perfectly balanced. So check this out. This is a perfect example of how precise this whole thing has to be. Look closely here. First, on October 24th, nobody actually gets paid. Instead, the company makes a journal entry to move the exact amount of net pay, that's $9,526.38, from its main account into a special payroll-only account. It's kind of like putting the money in a holding pattern. Then, 3 days later, on the actual payday, a second entry records that same amount being paid out to employees. And this separation is absolutely key. It prevents errors and keeps the audit trail crystal clear. Okay, so the employees are paid. Job done, right? Ha! Not even close. The next stop on this journey is all about giving the government its cut. You see, the company is now sitting on a big pile of tax money it withheld, and, well, the IRS is waiting. And this is a really big deal that most of us just don't think about. When it comes to payroll, a business is wearing two hats. It's an employer, of course, but it's also basically been deputized as an involuntary tax collector for the government. They are legally on the hook for taking the right amount from your pay and getting it safely over to the IRS. And if you want to see what that complexity looks like in real life, bam, here it is. This is a payroll summary worksheet. For every single employee, for every single payday, the company is tracking all these columns of data: gross pay, net pay, Social Security, Medicare, federal income tax, you name it. I mean, it is a mountain of data where even one tiny error can lead to some huge problems. So, how do they figure out what they owe the IRS each month? Well, it pretty much boils down to a three-step calculation. First up, they add up all the federal income tax, or FIT, that they held back from employees. Next, they tally up all the FICA taxes, that's your Social Security and Medicare, from both the employees and the employer's matching part. And finally, they just add those two big totals together to get the final amount they have to send to the IRS. So let's put some real numbers on that. For our example company, Adventurous.com, here's the math for October. They held back over $2,700 in federal income tax. Then, the combined employee and employer FICA taxes came out to nearly $4,000. So what's the grand total? The company has to cut a check to the IRS for, get this, $6,646.42. And remember, that's just for 1 month. And now, we're on the final leg of this marathon, reporting to Uncle Sam. Because here's how the government sees it. If you can't prove you paid correctly, well, then you didn't pay at all. This is all about that super important paper trail. And listen, this is not some once-a-year headache. No way. It's a relentless, repeating cycle. The year is broken up into quarters, and as soon as one ends, a clock starts ticking. The business has exactly 1 month to file a detailed report called a Form 941, which summarizes every single dollar paid out and every tax dollar collected. This happens like clockwork 4 times a year, every year. And that Form 941, that's just the main event. There's a whole ecosystem of paperwork here. You've got Form 940 for federal unemployment taxes, which they call FUTA. Then you've got more separate forms for state unemployment taxes, or SUTA. Each form tells a different piece of the story, creating this massive paper trail for both federal and state agencies.
It's a huge administrative burden, but it is totally non-negotiable.
So, okay, we've seen the journal entries, we've seen the tax math, we've seen the mountain of paperwork, but why does any of this matter so much? Let's zoom out for a second and look at the bigger picture here. When you really think about it, this whole hidden process is like the connective tissue that holds employees, businesses, and really all of society together. For you, the employee, it's the foundation of trust, knowing you're getting paid correctly. For a business, getting this right is just fundamental to staying legal and keeping your team happy. And for all of us, these tax collections are the lifeblood that funds these massive programs we all depend on, like Social Security and Medicare. So the next time you get paid, maybe take an extra second to look at that pay stub. It's not just a piece of paper. It's like a passport that's been stamped after a long, complicated journey of careful accounting and government reporting. So now that you've seen what goes on behind the curtain, what's the one thing about this hidden journey that really surprises you the most?